Welcome to the fifth in a series of videos that explain how to complete the financial statement and analysis system spreadsheet. This spreadsheet is part of the University of Wisconsin Division of Extension's Farm Management Program Pulse program. The full curriculum and spreadsheet itself can be found at the link shown on the visual where it says Farm Pulse program, and the spreadsheet itself can be found also on the Developing a Farm Financial Model website, which is also at the link shown on the visual. My name is Kevin Bernhardt, and I'm both a farm management specialist for the University of Wisconsin Division of Extension, as well as a professor in the School of Agriculture at UW-Platteville. This video today that we're going to be going over introduces and explains how to complete the balance sheet schedules G and H. Both of these are for breeding livestock. One is for raised breeding livestock, and one is for purchased breeding livestock. So let's get started. First of all, we need a timeout for a little bit of background when it comes to breeding livestock. There's a couple issues that we have to wrestle with. One of those is that we now have gone from what was before this market assets to now capital assets. And there's some differences between the two. First of all, on the balance sheet, market assets are those that are found on the current asset section of the balance sheet, while capital assets are those assets that are found on the intermediate or fixed / long-term asset section of the balance sheet. So the market assets are short-term. These are things that generally convert over and convert into cash within a 12-month period of time. Examples of these would be stored corn, feeder cattle, feed inventories, and things such as this. Current assets on the balance sheet, as I mentioned, and by the way, these all end up as revenues on our income statement at some point. Capital assets are different. First of all, they're long-term. They last for a long time. They have several years of useful life. In the case of land, it's perpetuity. So they're around for a while, they're expensive. And capital assets are things that ultimately end up as a cost to the business. So that makes a big difference as well. Another big distinguishing feature of a capital assets is that we get into this thing called depreciation. The capital assets are depreciated. In other words, they lose value over time due to use, due to wear and tear, due to becoming obsolete in terms of the current technologies, etc. They lose value. The loss of that value has to be estimated in some way. And the way we estimate that is through depreciation. A second issue we need to deal with when it comes to breeding livestock is that we have both raised breeding livestock, that which was born on the farm and raised on the farm and converted into a breeding animal, or we could purchase it. So the problem is they're different in that the raised breeding livestock doesn't have a purchase price. Certainly has a cost, but that cost is kind of buried a little bit in the feed and the labor and the vet costs and so forth that it took to raise that animal. It's not an obvious thing like the purchase price that we have on the invoice for a purchased animal. So that creates some challenges. And the third issue is back to that depreciation. How do you depreciate an animal that doesn't have a purchase price? So that becomes a bit of an issue as well. So we have to deal with all these things. One thing I do want to alert you to is that there is a video on depreciation in and by itself. Depreciation becomes a big issue in lots of different areas of financial statements. We're starting to get into it now with the capital assets. It carries on to the income statement and other places as well. So it's nice to know really what all is involved with respect to depreciation. And so we have a special video just for that because it's too much to explain as part of any one of these individual videos. So you might want to consult that particular video on depreciation to learn more about that itself, as well as the depreciation schedule, which is one of the tabs on the spreadsheet. Now let's get on to the spreadsheet itself and take a look at schedules G and H. There we go. There's schedule There's Schedule G for raised breeding livestock. You notice that Wisnet Farms has several entries there. And then we also have Schedule H down below that for purchased breeding livestock. Let's actually start with Schedule H because the purchased breeding livestock is a little bit easier. And remember, as we're going along, we're always wanting to try to track both the information needed for a cost basis balance sheet, as well as the information needed for a market basis balance sheet. When it comes to capital assets, there's really kind of a couple of things that's going to carry across all the capital assets that are information requirements. One of them is we need to know what the acquisition cost is. So what did it take to purchase that animal, or later on when we're talking about equipment, what did it take to purchase that tractor, etc. And that acquisition cost includes the purchase price itself, as well as any fees to get it installed, any transportation costs to get it to the farm, whatever it took to get it ready to actually be used, that all gets lumped into what's referred to as acquisition cost. The other piece of information that's common among all capital assets is we need to know the accumulated depreciation. And we subtract that accumulated depreciation from the acquisition cost in any given year, and that gives us what our cost basis balance sheet should be. So we have to worry about how to calculate depreciation and how to accumulate it over the years. So we'll deal with that a little bit in the videos here, and especially again in the separate video that's titled Depreciation. The other piece of information that's needed for capital assets is what is the current market value today. I'm circling that here on the screen. The market value may or may not be the same thing as what the cost basis value is, or the acquisition cost is. Market value is whatever that asset could be sold for in the market today. So it's a different kind of estimate that's needed there, and it may or may not be the same thing as the cost side. Usually it's not, quite frankly. You do want that market value to be a bit conservative, and you want to be careful of big changes from one year to the next. That just causes other kinds of challenges as well. So be a bit conservative, be a bit sticky with how quickly you change that market value. But ideally, the market value is a reflection of what that asset could get in the marketplace today if indeed it was sold. For Wisnet Farms, when we look at purchase breeding livestock, they have a small little beef herd here. They have a beef bull, just one, as you can see. They have a bred heifer. They have some open heifers and so forth. And you can see the information that's tied to those. The one that we'll fill in is for the beef cows. They do have some beef cows. They have 9 head of beef cows, so we'll fill that piece of information in. The acquisition cost of those beef cows was $1,800 a piece per head, and the total accumulated depreciation in this case is $2,341. And how did we get that accumulated depreciation? That will be covered in the depreciation video. We'll also cover it a little bit more in the next video on machinery and equipment. But it is a mathematical process needed to estimate what that depreciation cost is. In the case of Wisnet Farms, the market value is also $1,800. Now, in this case, that is the same as the acquisition cost, but it didn't have to be. It just happened to be in this case, but certainly it could be different. So that sort of takes care of the purchase breeding livestock side. As you can see, that adds up to $18,378 on the cost basis side, adds up to $21,500 on the market basis side. Again, if I go over to the balance sheet, I will see that in here. So here's the purchase breeding livestock at $18,378 on the cost basis side, $21,500 on the market basis side. So that information again is automatically transferred over to the balance sheet. All right, now let's take a look at the one that's a bit more challenging, and that's the raised breeding livestock. Raised breeding livestock, the market basis is not a problem. Market basis is going to be the same thing for whether it's raised or purchased. Doesn't make any difference in terms of what you could get for it in the marketplace today. So that part is not a problem. It's on the cost basis side that we have a challenge, and we have that challenge because we don't have a purchase price. So how can you depreciate something that doesn't have a cost? Well, we know that there is a cost in raising that animal, and that's for the feed, vet, medicine, et cetera, that went into that animal from the time it was born until it reaches the breeding age. Farm Financial Standards Council recommends two different ways that you can use to value the cost basis side of a raised animal. One of those ways is called the full cost absorption method, and the other method is called base value. Base value is what we're going to use here in this Wisnet Farm case study, and that's what's used in this financial statement spreadsheet. But I will take just a second to explain what full cost absorption is. The full cost absorption method for valuing raised breeding livestock is easier in concept, but it's much, much harder in practice. So the idea with it is that you would collect and keep track of all the costs that it took to raise that animal from the day it was born until it enters the breeding herd. You're going to track those costs for feed and vet costs and labor costs, etc. Once that animal goes into the breeding herd, then all those costs now get capitalized, and then you use that capitalized value as a substitute, if you will, for a purchase price, and you depreciate that capitalized value. Now, the challenge with this is that normally when you're accumulating those costs for feed and veterinary costs and labor and so forth, those are becoming deductions on for your taxes for that year. But if you're going to capitalize those costs and then depreciate it out, you can't do both. You can't take the cost off originally and then also take the cost off when you depreciate it out. So you have to back out all those costs, not deduct them, and instead deduct them as part of depreciation over the next few years. So that requires a lot of record keeping, and that's one of the reasons why the full cost absorption method is kind of, frankly, more understandable conceptually, but much, much harder to do in practice. However, if you do that, then you can go back down here and use Schedule H, because you're right back at the same place. Instead of an acquisition cost here, you would have the capitalized cost. Okay, let's move on to the base value method. The base value method is much more commonly used, much easier in practice, but conceptually a bit harder to understand. So what is it? What the base value method is that the owners, managers at some point choose a value that represents approximately what it would cost to raise an animal to breeding age. Once they decide that cost, that becomes the base value. And that base value stays the same for several years. You don't want to change it hardly ever, not very often at all. Do you actually want to change your base value? So that means it's not terribly reflective sometimes as what's happening in the marketplace, because, things change. It's more volatile there, but you're keeping that same base value. It's also not reflective of at any time as the actual cost that went into producing that animal to breeding age. So it's a little bit harder to understand conceptually because of that. But the way it works is a value is selected, is chosen. That value stays the same for several years. It's called the base value. And from that time forward, anytime an animal gets into that stage, and it could be different, by the way, for different stages of breeding, open heifer versus bred heifer, etc. But as an animal enters each stage of the breeding herd, then it automatically is assigned that base value. There's no question about it. It's just automatically assigned. And that's the way the base value method works. Now, because of that, what's happening with the actual cost that it took to raise that animal for the feed and vet costs and so forth, those are continuing to be deducted in the year that they occurred. So therefore, when you use the base value method, those expenses have already been deducted, and so we do not depreciate it then. You can't do both. So with the base value method, there is no depreciation cost involved. So for Wisnet Farms, we see it's a dairy farm, so there's a lot of them here. We've got these different stages of the breeding animal. Most of it is filled in here. Let's fill in the one for dairy cows. So for the dairy cows, beginning of the year inventory is one of the pieces of information we need. So when the year started, in this case, we had 198 cows. At the end of the year, we went back out and counted them all, and we lost a couple. Now we have 191 cows. The beginning of the year base value, we could change from beginning of the year to the end of the year, but most of the time you do not want to do that. So at the beginning of the year, the base value in this case for breeding cows was $1,650. And that is the same thing at the end of the year as well, $1,650. And finally, we also have to have the market value. So we go out, in this case, this is not connected to the base value at all. We're just going to go out and look at the marketplace and see what we could normally receive if we were to sell these animals in the marketplace today. In this case, this year, it's about $1,500 is what they're worth in the marketplace, which, as you can see, is different than the base value. And that's typical that it would be something different. Once all that information is filled in, the cost basis number is automatically calculated. The market basis number is automatically calculated. These all add up, as you can see down below, $460,050 on the cost basis side, $419,000 on the market basis side. If I go over to the balance sheet, you'll see those numbers there under raised breeding livestock. Okay, so we got them all in there. We got all the information in. We've completed both Schedule G for raised breeding livestock. We've completed Schedule H for purchase breeding livestock. So it can be confusing, especially if those animals are on the raised side. So that ends it for this video for those particular two schedules. The next video, we're going to talk about Schedules I and J, which is machinery and equipment and real estate, two other kinds of capital assets. Until then, thank you for listening.